Hello, YouTube. James Baker here, and today I am interviewing an Australian tax advisor. And this is great because I need to learn about what kind of taxes Australians have to pay when they have LLCs, and also what happens if you want to move to Australia. What kind of taxes are you going to pay there? This is going to be a candid conversation with me and my friend Mark about taxes, and we're going to go into situations for entrepreneurs and business owners. Maybe we'll touch on employees. But I think it's going to be really useful if you're either from Australia or thinking to move to Australia. It's going to be a really great video to bookmark and send to your friends. So without any further intro, this is Mark Mansour today. Hello, Mark. Thanks for being here today.
James, thank you so much for having me. It's a pleasure. I'm looking forward to chatting.
Actually, you're not here today. You're here tomorrow, right? Isn't it Tuesday right now?
Yeah, it's the 17th today. Yeah. It's we're always one day ahead of you guys.
Yeah, thanks for being here tomorrow. So, okay,
You're in the future.
So I have a bunch of questions and I want to get into them right away because I open LLCs and I help a lot of Australians who don't live in Australia. And I know the rules are changing all the time and Australia's kind of cracking down a little bit and they're being a little bit more strict in particular. Can you tell me a little bit about the news in Australia as it comes to breaking residency and what it means to be a resident in Australia and to break residency in Australia? Because the taxes generally in the US at least are based on heavily based on residency, so where you're living and working. So can you comment on that? Because that's changing constantly in Australia.
Yeah, great point. Yeah, and it's very different to the US, where US kind of is based on like a citizenship or a green card test, whereas in Australia it's based solely on residency, and so you can continue being an Australian citizen, but not be a tax resident. There's two main steps in cutting your residency, and the first one is to kind of sever ties with Australia, sell your stuff, cut your jobs, and effectively kind of have nothing really in Australia. And then the next step there is to then establish ties in another jurisdiction. And so that's what gets a lot of people, is that they don't establish ties somewhere else and they just kind of hop between multiple countries. And the ATO does not like that one. And so you need to set up base. Let's say, for example, you've moved to the Philippines, you go get a residency there, you go get your long-term lease, and then you start living there. And so that's the way to cut Australian tax residency.
And that's an issue I've seen with some clients is that they'll live in. I have a guy who just moves every couple of years, but it's hard to like have an established residency, and that's why you want to go to Dubai or a Panama or a country that you can get residency in and not pay taxes in, and then especially one that's like centralized so you can travel around.
Yeah.
How has that been changing? How is Australia like modernizing that or getting more strict on that?
Yeah. So they've released multiple consultations recently, and they just believe that the rules at the moment they're too kind of gray. They don't have enough substance, or it's not clear enough for people to follow. We all know that tax laws are always like that, and so it's always needs to be on a case by case basis. And so what they want to do is they want to introduce it. Strict tests. And so a couple of the tests will be like, let's say you want to cease Australian tax residency straight away. They want you to have to leave the country or be outside of the country for more than 45 days for the last 3 years, and then you can cease Australian tax residency. So it means that you may be paying tax in Australia and potentially another jurisdiction for 3 years. And so let's just give an example of you're moving as an Australian, moving to Hong Kong under these new kind of proposed tax residency rules. There's no double tax treaty with Hong Kong. So you may need to pay tax in Hong Kong and Australia for up to 3 years, effectively having a tax rate of 60, 70, 80%, which is outrageous.
That's crazy. And then the penalties, I think I heard that they were stepping up how far they could go back to assess taxes and penalties for people who never had a residency or that they audit, right? Isn't it? What happens if you left Australia this year and you don't properly establish your residency? Australia can audit you and go back and assess taxes?
Effectively, yeah. And so one of the aspects with Australian tax, I'm not too sure how it is in the States, is once you actually lodge your tax returns, you've got what's called an amendment period. And so the ATO can come back within 2 years from the date of your notice of assessment and say, hey, James, we don't believe this is correct, and we want to change up your situation. They've got an unlimited time if they believe you've done something fraudulently or something illegally. But normally the 2-year period is the mark, and that's for individuals. And so they've got up to those 2 years to come and say, hey, we don't believe your residency is correct. The issue, though, James, is when you don't lodge your taxes and you just kind of ignore them. And then so that means you effectively
Mm.
haven't established any amendment period so that they can effectively come back at any time and come back and say, hey, yeah, we want to assess you differently.
So we call those protective returns in the U.S. And
Yeah,
there's a lot of reasons for foreign corporations, kind of doing business in the U.S. to file protective returns. It's for the same reason. So if someone leaves, they should keep filing a zero return, saying, "Hey, look, I had no Australian income. I'm a foreign person," and send it. And it's easy to do, I'm sure.
yeah.
But they should keep doing that.
Yeah, that or they would declare that they've got no further obligation to lodge in Australia, and then there is no obligation to do that. But again, you're not closing it off, and you're just kind of keeping that door open. So it comes down to each person's situation.
That's a good answer. Thank you for answering that. I want
Thank
to
you.
jump into back into Australian who are residents. So my next question is: by default, if an Australian citizen and tax resident opens an LLC, who's paying tax on that in Australia? Let's say the LLC does no business in the U.S. You're not paying U.S. taxes. Awesome. How does that work in Australia?
The way an LLC is normally looked at is as a partnership in Australia. And so then it depends who holds the membership interest of that LLC. What I've seen is people who haven't got ill advice have gone ahead and set up the LLC in their name directly. That, however, you can potentially set up an LLC where your membership interest is either an Australian company or even an Australian trust. And so that's an opportunity to strategize how you want your LLC to be taxed.
So it's pass through. So the results of the company are just taxable by the owner.
Exactly. Yeah. 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 Exactly. And my understanding is a C Corp is treated as a company in Australia. So I believe you can do a C Corp election. Is that correct?
That's right. An LLC can elect to pay taxes as a corporation, and there is a separate type of entity called a corporation, which has shares instead of membership interests. So, if
Yeah.
an LLC, I understand that a corporation is a corporation. That's like multinational, international corporate law. That's the whole point of having corporations is to keep your business activity taxable in one jurisdiction. That's why you open a corporation, right?
Yeah.
But what about an LLC tax as a corporation? Is that the same?
Yeah, it would be. So you'd if you do that election, then it would be taxed as an Australian company because the way the Australian company residency rules work is you get caught up in it being an Australian resident company because you're doing the central management and control from within Australia.
Yeah, we have the same issues in Portugal and a lot of stuff we've
Mm,
been doing recently. If the management, and that's what I tell people about using the LLCs, even in Canada, if you're Canada's a good example because the LLC is looked at like a corporation, which is inconsistent with US law, and they're our neighbors, so there obviously is a lot of overlap there. But the idea that if you're running the LLC and you're just one little business and you're the manager of the business, then it's probably taxable where you're doing the work, no matter what. If it's even if it's an LLC or a corp, but there's a disconnect because you never send money back and there's ways to like mitigate risk, but at the end of the day, it makes sense. Is it possible to mitigate that by hiring management outside the country? For example, let's say they had their cousin who lives in the UK or whatever in Idaho, and they say my cousin's the manager. Does how much does Australia look into that? Is there case law about that?
yeah, there's heaps actually, and I'm looking at it for clients now in relation to offshoring businesses. And so there are a number of kind of steps involved in doing that. There's a few governance kind of considerations that need to get done to ensure that it's very clear from the ATO's perspective um, that corporation is not managed and controlled from Australia. That being said, you can do operational activities from Australia. And so let's say you're running a drop shipping business, you can kind of fulfill orders, you can kind of do some things from Australia, most of it, but the strategic decision making need to be made in a country where the central management and control is. And so the ATO clearly defines the difference between what they believe to be strategic activities as opposed to operational activities.
So it wouldn't really make a ton of sense to have, if you're doing an e-commerce or dropshipping business, to have a U.S. corporation. An LLC is better because then you can deal with your Australian taxes, not pay any U.S. taxes, and it's just much cleaner, right? Because you have to pay your taxes. It's your money. You're making the money. But if you had a corp, then you have the risk of paying taxes in the U.S. and Australia, making it way more complicated than it needs to be. So,
Yeah, there's a
right.
few pitfalls there for sure, James, specifically around claiming that foreign income tax offset, which sometimes you can't claim if the membership interest is like if it's a C Corp and then you've got the membership interest in your personal name because they're two different entities. And so there is sometimes there's some small issues there. So that's why we always recommend to get kind of proper advice and to potentially go down the route of holding it in a Australian entity. And so, yeah, we will recommend LLCs over C Corps most of the time.
Yes, I mean, if you have like some kind of physical business in the U.S., then you could probably have the management there, right? And then you'll have the corp. But if you're doing physical business in the U.S., I'd recommend you talk to someone like me as well, so that that's why we're here, right? I'm never going to take clients from you. You're not going to take clients from me. We're here to support each other.
Well, complementary services. It's the most
Yeah,
important thing, right?
totally.
You can't do everything yourself. And if anyone tells you they know everything, then I would stay well clear of those guys because it's impossible to know everything. And so the aim here, James, from my perspective as well, is to understand from each other, but also kind of leverage our skills to be able to put our clients in our best possible position or in their
Every
best
question,
possible position.
every question I'm asking you is like from a client conversation I've had in the last couple of weeks. So
I love
these
it.
are all, and I have some that I have to ask still, but it's the same thing. The only firms that are going to give you advice that's good in multi jurisdictions are very big regional firms with presence in both countries, and those are you're
Mm.
going to pay for that too. So
Yeah. And
it's,
even to be fair, even those ones, James, I've found that they don't really care that much. Just depends on how it is. I've seen heaps of clients go to global mobility teams in like Big Four, and then they just kind of don't really care about them because they're a small fish
yeah,
in a big pond.
it's
And so
exactly.
they get really bad service, and they come to me after, and they're like, "Oh, they didn't tell me about this. They didn't tell me about this. They didn't tell me about the deemed disposal, the exit taxes. They didn't tell me about how to structure my business or my Australian operation so that I'm doing things well." So it's I wouldn't even go down that route. I'd go down the route of what you're doing here, and so having multiple advisors in different jurisdictions who are specialists in what they do.
Yeah, I agree 100%. And I say that because I used to work in large regional, but there are guys that know what they're talking about. But they're busy. They're only working on large corporate deals. It's hard to get a hold of them, and that's
Yeah.
why that's why we're out here on YouTube putting out information, educating people, and that's how we're doing our own thing out here. So for an Australian that is investing in the stock market, they want to have a U.S. brokerage account. They want to keep some money in U.S. dollars, diversify. What does it make a huge difference to have in their own name? Have it in a multi-member LLC, or have it in a multi-member LLC they own versus what a trust owns? How would you structure it if someone has 500 grand and they want to invest in the stock market in the US? How would you structure it and they live in Australia?
There's actually multiple ways of going about it, and so one way, uh, personal name could be easier because as an Australian tax resident, you need to pay you got to pay on your tax and worldwide income anyway, and so what you can do is you can take advantage of like certain capital gains tax regimes that you hold in your personal name that you might not hold in other structures.
Would you still
Uh,
get a benefit from that using a multi-member LLC?
and so how would a multi-member LLC would still be would say, let's say you have 50%, I have 50% of this
Or
brokerage
like,
account.
no, Fred and Jan are married. They each own 50%. It's a
Yeah.
couple, they're married, they each own 50%. The reason we do it is because in the US we have estate tax issues.
It's the way I would go about it is going down was potentially holding it in a personal name or an Australian structure. Only because my understanding is that there's if you a foreign person holding US stock, there is no capital gains on that one. There's no tax in the US, and any dividends that need to get paid out can potentially have the withholding tax applied to it. And then it comes to Australia, and we claim those withholding taxes as a foreign income tax offset. So that's my understanding, and so that's why we normally recommend to go down the route of not going down a US LLC just because it may further complicate things.
Complicated from the US side, whereas there's no withholding taxes if you use a multi-member LLC because
Yeah,
technically it's a US entity, and the broker and the partnership is the one that should be withholding the taxes, and you would withhold at a reduced rate based on a treaty, I believe, on the 8804 form. So, but
yeah,
most people are not investing in dividend stocks because of the withholding issues. So most people are just investing in ETFs
yeah.
and money markets or whatever. And so would that retain its same status? Would it retain the same if it's a long-term capital gain? If you're selling your ETFs, it would keep the same status, I think, right?
Yeah, exactly. So you get the 50% capital gain tax if you're eligible for it. on any assets that you hold for more than 12 months. So it works out pretty well.
15? 15, right?
50%, a 50.
Why is it so high? Is that high or low for
It's
Australia?
pretty. It's pretty high. It's good value. So if you say you hold Tesla shares for over 12 months and you've made a $10,000 gain on it, the assessable gain will be $5,000.
That's crazy. So what's the earned income tax rate? So what if I earn $10,000?
It just depends on what your marginal tax rate is if it's in your personal name. So let's say you're at the highest tax bracket, then you may be paying tax at 47%.
So the capital gains are taxed higher.
It's not that it's taxed higher specifically. It's that you apply the 50% capital gains tax discount, and then that net figure gets added to your income. So let's say you're earning you're got an income
Oh,
of like
oh.
300K, but you've made 100K capital gain from the shares. You discount that to 50K, and then your income is now 350K, and the tax is applied on that 350K.
I thought you were paying a 50% tax rate on capital
Yeah,
gains. And I was like,
yeah,
that's
yeah,
crazy.
yeah.
So you're paying a regular tax rate on half of the capital gains.
Exactly. Yeah,
Okay,
yeah.
that's cool. That's kind of, I guess, more or less what they pay in the US. So that's pretty cool. So the answer is talk to your accountant in Australia and figure it out. Okay.
Yeah, it's a hard question, that one.
Can you give me a little overview about the tax system in Australia? Are there different like states and different obviously there's the country. How does that work? And like give me an idea about the tax rates and the taxes and how I get paid if I have a job there.
Yeah, yeah, good question. So in relation to the state tax question is the same in all the states. So there's no difference when it comes to income tax. So if I'm here based in the state of Victoria, if I was living in the state of Queensland and earning the same amount, then I'm paying the same amount of tax. And so you can't use states to kind of change our income or optimize our income tax from that perspective. That being said, there is state taxes specifically depending on the state you're in, and that's mainly for the transfer of property. So let's say you buy a commercial property. So I'm working with a client now that purchased a large commercial property, and the state taxes here in Victoria are higher than say the state of Queensland, where it's different. And so that is one aspect. And if you set up a trust, that's also a certain kind of difference when it comes to state taxes. But as a majority kind of thing, the state taxes is not a huge deal. Most people don't really look at it that way, and income is taxes paid from a federal level.
Really interesting. So you have property taxes, and then you have, but the income tax is the same. It's different. Like, again, I keep thinking about Canada, but they have their different boroughs. You know, they have Alberta, Montreal. They
Yeah,
have
yeah,
whatever
they've got their provinces are
provinces.
taxed
That's the
differently
word.
as well, for sure. Whereas in Australia, it's not the same. So when I was living in Canada, I always remembered Quebec was taxed so much higher, and they were never happy about that one.
No, people are not happy to pay taxes. The best.
We can talk about tax rates in Australia for tax residents, because the
Yeah,
tax
for sure.
resident tax rate and the non-tax resident tax rate is slightly different. And so if you're a non-tax resident in Australia, you pay tax from the first dollar at 32.5%. And then it goes up until 120K. And then you pay 37% from there. And then after 180K, you're paying about 45% in the dollar from on your income as a
Gets
non-resident.
gets there quick, and so as a non-resident in the U.S., non-residents get less deductions
Yeah.
and generally have to file separately. Where if you're a resident, you get a bigger standard deduction, and you can file jointly, and
Mm.
which is if you're married, it gets you better rates. So, but ultimately, it's pretty similar. So in Australia, you're paying 200K and up, you're paying 47%, is what you said.
Pretty much 180K, yeah.
180K.
And that's even for residents as well. So if you're a resident, you're doing that, but you also normally pay the 2% for Medicare levy, and so it increases out to 47% um, above 180K, which is not easy to give up on that one. But I like what you mentioned, the filing jointly and separately, because that's something we don't do in Australia, and I've seen a lot of people kind of get caught out in that one when we go and we get their US income, for example. And so we can only apply a foreign income tax offset credit on the tax that that person has actually paid that relates to that person. So let's say you said you've got a couple and they've earned, say, 500,000 in one partner's name, but they've split it up across the two. Then their tax rate is a lot less. But in Australia, we can't do that, and so we have to bring in that 500,000 straight into one partner's name, and so there's a big mismatch there as well when it comes to that. So that filing jointly is a huge aspect in the States that saves a lot of people taxes.
Yeah, because there's a lot of people whose spouses don't work or whatever. Like one spouse doesn't work, and
Yeah.
then you can get the tax rate for them. And in Australia, I guess you have to pay them a salary even if they don't work to get the benefit of the at least 180K, so they get
Yeah,
the benefit of all the lower brackets, right? What are
for
the
sure.
corporate rates like in Australia? Like, what are the corporate tax rates?
Yeah, so the corporate tax rate, if you're an active business, is 25%. If you're it's a passive corporate company, then it's 30%.
And that's for is there like a dividend tax as well when you take money from the corp?
Yeah, 25% if it's the active one, and again, same thing, 30% if it's inactive one.
So you're basically getting to 50%, but you can defer a lot of the taxes by running stuff through a business.
Yeah, you can claim a bit more deductions if you're running a business as opposed to being an employee. And we always recommend, depending on everyone's situation, to go down that route.
So here's a question that I almost forgot to ask that I'm always asking. What is the deal with the trusts in Australia? Why does everyone have a trust? And why, if I move to Australia and I'm an entrepreneur, should I consider opening a trust? Explain this, please.
Yeah, two main reasons: tax optimization and asset protection, and they're two really important aspects here. One aspect from the tax optimization point of view is, let's say you're owning an active business, and the active business is selling stuff, and you've said you made $1 million of profit, right, in that company. What you can do is you can pay money from that company and then to your trust, who's the shareholder of that company, and then you can pay it out somewhere else. Let's say what we spoke about in relation to a couple. One partner's not working, one partner is working within the business. So you can pay money to the trust, and then from the trust, you can then distribute it out to the partner that's not working, so you don't have to pay them a salary. But what you can do is when you pay the dividend out from the company via the trust, that tax that was already paid in the company is taken up as a credit in the personal's name. And so if their personal tax rate is less than 25%, then they may be able to get a refund of that extra money that was paid within the company.
Making it an effective 25% tax rate.
Exactly, or effective maximum 25% tax rate.
This is really interesting because if you use the trust and you set it up right and you're an entrepreneur, you can be paying 25% in taxes, kind of flat rate. Or if you have a job, you're paying 47% on the same income. And that's crazy. And it's crazy how they incentivize businesses so much. And it's not saying it's bad. I'm saying it's good, but it's really tough on the workers, right? The people who have like jobs. It's like really hard to get ahead with a job. That's why you should be entrepreneuring. And whether you're using an Australian company or US LLC, having a business is better. So
100%. No, I agree. There's a lot more you can claim if you're a business. There's a lot more tax optimization you can do. And so one thing in Australia is certain carve outs if you're earning your income via trust and it's via your personal services. So the ATO stresses on wanting to be a genuine business. And so let's say you're a doctor, right? And we've seen this before. You're a doctor, but you're running your income via the trust or via a company, but you're doing all the work from your personal services, then you can't even utilize that 25% tax rate, and then it gets taxed in your maximum. So it's great if you're a genuine entrepreneur who's selling out of who's not selling from their personal services, and so there's a lot more you can claim that way, as we said, and there's a lot more optimization. So you don't really even need to distribute it to, and from the trust you can also distribute it to another company. And so let's say you've got a company that you want to do certain investments or high risk investments. Once you get it from your initial trading company, you can send it via the trust to the new company, and then that company can kind of be its own separate legal entity running its own investments as well.
and that's I guess like why you would brand something a little more like if you like I think you have your websites like I didn't check it out before the call, but like if you have like global tax systems and then you have like this is it, your face not on anything, you're like, oh, we sell packages, and then it's like no, it's not me, but it's at the end of the day it's it's still
Yeah.
like you're the main guy doing all the work, but you can get away with it by doing it kind of like that, right? By framing it the right way.
Yeah, well, Yeah, again, it comes down to the ATO may look at it, but you just need to prove that you more than 50% of the revenue is derived from someone else. So the best way to do it is to hire someone, and again, so that's another encouragement for entrepreneurial activities and to bring people to work for you as well.
So what's the how do you gauge risk out there? How what do you call your revenue, your IRS in Australia? And like how aggressive are they? Are they auditing people? Are they sending this people knocking on doors to people's houses? How like what's the kind of the like the vibe out there for the tax authority in Australia? I'll tell you about the US after you tell me about
Yeah,
US.
please. So from my speaking to other global and kind of worldwide tax professionals, everyone is scared shitless of the ATO, and so the ATO, Australian Tax Office, is our equivalent of the IRS, and they're not fun to deal with. They're pretty strict. They do a lot of audits. The way they do it is the top 500 taxpayers, so like the biggest 500 group, they do kind of audits on them, and then now they've gone down to drip down to next 5,000, the top 5,000 kind of groups, and now they're doing audits on those guys as well. So it's quite a high audit activity entity. But what we're seeing recently is that there's not enough demand for people to work there, and so they haven't been able to get to people on timely manners, or they haven't been as comprehensive as they would want to be. But they're pretty serious stuff, and we always try to be on their good side and not their bad side.
Well, that's why people hire us so to make sure we can do as much as we can to be prepared, documented, organized. When you take a position that you have some basis for the position you're taking, whether you're paying taxes or not paying taxes, you can show why or why not. They can always come back and say yes or no, and that's the risk inherently in those decisions. And it's interesting how you say it like that because in the U.S. it's kind of the same. It's a bigger country, right? You know, where it's a
And
massive
extra
country. We
people.
have yeah, we have 300 million people in the U.S., right, or
Mhm.
maybe more. I don't know, but there's only like 100,000 IRS agents, so
Yeah.
it's the audit rate is extremely low, and the information sharing between the IRS and like the payment people, they're trying to make it more, and they're trying to make more stuff required so they can match data, but it's just like not that good. And so the US is kind of the Wild West. I talk to people who are like, oh, I haven't filed in 10 years, and they just like don't care. And it's literally, I had talked to someone today who's like working on it. He's like 6 years behind, and it just like happens all the time here. And not to say you shouldn't do your taxes, but when the IRS does come after you, it's the most powerful collection agency in the world. They can do anything, and they can take your money. But
Yeah.
and they have more tools, and they're growing. But it's not like something the people are scared of the IRS. But it's like if you do it right, you have a lot of ways to get out of it. So that's really interesting. The ATO is out there
Mm.
knocking on
Yeah.
doors. The IRS, they issued a. It's funny. They issued a ruling or something that they're not knocking on doors anymore at people's houses and just doing like random check-ins because they were doing that, but they're supposed to stop.
We saw not too long ago the ATO knocking on doors for like certain fraud cases and things like that. And they came out with like a heavy arsenal. Like these guys are wearing ATO jackets, but they've got like guns as well in their pockets and stuff like that. And so we're like, well, it's a bit much, but there is potential kind of danger when knocking on people's doors, especially if they're doing kind of fraudulent activity.
So, can you give me a couple examples of when LLCs and using U.S. companies have been beneficial for your clients in cases that you've seen?
Yeah. So the most useful time is when they're not Australian tax residents, because the US LLC is one of the most powerful structures there is in this world. And so there's a couple of things I want to talk to you about with James on this one as well, for a client of mine. But the best way I've seen to be used is if you're not in Australia. Another use case of it is if you are doing US business and you want to kind of have a corporation, but have an LLC and that has a presence in the US and it's got an US office, and people want to pay into the US. That one is not as useful from a tax optimization perspective as running an LLC from outside of Australia. And so, an example of someone I've worked with recently who what they've done is they've moved their residency, and so now they're living in Dubai, the UAE. And what they've done is they've got a UAE head company, but every sub company under that now is a US LLC. And so the advantage of that one is that the membership interest of that LLC sits with the UAE company so that there is no tax on that one. And so it works out really, really well.
And that's something I think very recently they are assessing taxes on UAE companies. So a
Yeah.
lot of people are moving their LLCs back into their name where there's no taxes, or maybe using a different jurisdiction because they are starting to assess a corporate tax, a small corporate tax in the
Yeah.
UAE.
Yeah.
But
9%
that's
corporate
interesting. Yeah,
tax.
I agree with you. Having a company as a non-resident of anywhere, the U.S. LLC is the easiest to use. It's a really great option. And then yes, if you are going to open a shoe store in Kansas, then you should open a U.S. entity and keep the tax separate because you don't want to mix it up too much.
Yeah.
Um,
Yeah. I would recommend that one for sure.
Okay,
Yeah.
so Mark, thank you so much for being here. This was really great. If people are thinking about moving to Australia, or if you're Australian and want to break residency or get a second opinion on your taxes, I encourage you to contact Mark. He really knows what he's talking about. He's very accessible. Mark, where can people find your information?
Yeah, well, website worldwideadvisory.au. Find us on YouTube as well, Worldwide Advisory, or on LinkedIn as well at Worldwide Advisory. We'll leave our notes in the comments below. We'll leave our contact page and a contact in the description below as well for people to reach out.